This video is brought to you by Knowledge at the Australian School of Business. For more information, please visit knowledge.asb.unsw.edu.au.
Federal Labor came to power promising a root and branch overhaul of tax. It did that with what was called Australia's Future Tax System Review, informally known as a Henry Review to the likes of you and me. It was commissioned by the Rudd government in 2008 and published in 2010. The review was intended to guide tax reform over the next 10 to 20 years. It made 138 recommendations, including a 40% resources rent tax on the mining sector, a 5% cut in the company tax rate, a leap in the personal tax threshold, and a halving of the tax on superannuation fund earnings. Well, we're now a year on from Ken Henry's review, so the question is, well, what's really changed? I'm joined by John Piggott, an economics professor at the Australian School of Business. He was also a member of the panel that designed the nation's tax blueprint. So, John, we're 1 year on from the Henry Review. What's your overall feel about it?
I'm positive about the Henry Review. I think it provides a blueprint for a couple of decades out, and I think we're already on the way. These things are never done as well as you want or as fast as you want, but I think that it is a testament to the realism of the report that already there's some take-up by government. 9 of the Henry Review recommendations have been adopted in the budget. Well, there are 138 recommendations. I think 9's a pretty good start.
And the mining tax, of course, highly controversial at the time. Now looks as if it's been watered down quite considerably.
Yes, I think it'd be fair to say the mining tax, people like me would regard as a disappointment. Resource rent taxes are an efficient way of raising revenue. And if you can raise revenue in that efficient way, then that means that other less efficient means of raising revenue can be wound back a little, and that's advantageous to the whole community. I think maybe it's an example of where transnational companies become more powerful than governments. Something that 50 years ago we would not have seen, but something which I think we do encounter nowadays.
And is this maybe sort of a symptom of government nowadays? If a large organisation wants to come out with some publicity and to take out full-page adverts, then they can just change tax policy quite radically as well. A quick turnaround. It only took them a few weeks.
Well, lobbying happens everywhere. I mean, 2 decades ago, the US tried to introduce a resource rent tax. It didn't get a resource rent tax at all. So this is not a new experience in some sense, but I think it's a salutary one. I sometimes think that with transnational corporations, now we have corporations which are genuinely global and extremely powerful, and if not monopolistic, then oligopolistic in what they sell. I sometimes think that we haven't moved as far with governmental institutions. Maybe in due course, as the international governance unfolds, we'll see the need for supranational institutions which will match the power of some of these corporations.
Okay, let's move on to income tax. The Henry Review proposed a real simplification of income tax, just having 2 main income tax bands as well as a threshold of 25,000 Australian dollars. Do you think we'll ever get there?
Oh yeah, I think we might. Income tax is one of those areas where toward the bottom of the range it's very easy to raise significant revenue because most people have some income, some taxable income. And so it's always difficult to, in revenue terms, particularly now that we are looking at deficits, to give that up. Right? 5 years from now, we may not have that kind of bottom line in the government budget, and you may well then see a movement in that direction. I think, once again, this is something that we should aspire to, and it's something that might take a decade or even 2 decades to reach. But in terms of simplification, it's very powerful because it leaves so many small income earners out of the tax net entirely. And the best kind of simplification is to have a situation where significant numbers of people don't have to bother with the tax system.
But does a wider majority of the population actually want this? After all, many people like looking for little bits and pieces that they can maybe save on their tax here and there and shave a little bit more off their tax. Should we be moving to the, say, UK system of just having one standard tax, that's it, you can't really claim anything at all? Very simplified, but it doesn't actually give all those little tweaks that government and the wider population like.
Well, one of our recommendations is a standard deduction. I think in the last budget the government moved a considerable distance towards that. And that does simplify things. Because it means that there are significant numbers of people who perhaps don't have to bother with an accountant, or at least not every year. You know, get it set up with an accountant. You find out that a standard deduction really is better for you than itemising everything, and you live with the standard deduction for a number of years until your circumstances change. So that's a simplification. What I was saying, though, was that if you can take people who earn small amounts of income, people perhaps who are retired, who have a limited amount of investment income, right, and just leave them out of the net altogether. That's a big simplification. And that's available if you follow the three-tier pattern that we indicated would be desirable in the report.
And John, how about labour force participation, again part of the Henry Review?
Yeah, well, one reason that the Henry Review was successful is that the panel members shared values, and one of the values they shared was the importance of labour force participation. Both in the way we thought about taxation and the way we thought about welfare support. In both cases, we were very concerned that there be every kind of encouragement, I guess both carrot and stick, to get people into the labour force. And in the most recent budget, I did notice that the dependent spouse rebate is being phased out. That's one example of the way in which you can encourage people not currently in the labour force to enter it. I think we do face a skill shortage in Australia. We face a rapidly expanding economy, which is good in many ways. But in order that it develop without significant bottleneck and impediment, labour force participation has to continue to increase. And I think some of the measures announced take us some distance along that track.
And of course, in your research, you do look at the ageing population. In the Henry Review, you were looking at the simplification of super to try and ensure that we actually do have a golden old age. Not a lot seems to have happened on that so far.
No, little bits and pieces. I think superannuation in Australia is, in its broad design, really the best around. I see it as a gold standard. We have a very good transfer system that takes most people in old age out of poverty, not everyone, but most people in old age out of poverty. We have a system which insists that a large proportion of the working population save, so they cannot immediately free ride on that transfer system. The effectiveness of the transfer system in terms of its targeting to those in need, we do the best in the OECD. And I think that's a broad structure that you would have to applaud, and I go around the world advocating it. And then I have an addendum, and I say, along with that best practice design, we have the world's worst superannuation tax system.
And we've seen that the government has in some way responded to some of the suggestions in the Henry Review about encouraging people to save by saying if people do pay too much superannuation, they're allowed to hold their hands up once and say, I'm really sorry, and get the money back. But does this go far enough? Are those thresholds too low, and is this discouraging people to save?
I think the thresholds are too low. I would prefer to have seen a $50,000 threshold regardless. People see this as regressive. They see it as a way in which individuals can rot the tax system. Those kinds of expressions are used. I don't see it like that. I think we have a transfer system which helps people who are worse off very effectively. Then when you get to people who are comfortably off, I think they should be encouraged to look after themselves in retirement. At the moment, most of those people do end up at some stage in their retirement drawing on the age pension. I would much rather we offered a tax concession now so that they could save and then use those accumulations in retirement so they stayed clear of the welfare system altogether. So I think the challenge with the review was to take that situation and try to put together a set of recommendations which, taken in their entirety, would move us from where we are to something close to an ideal method of taxing retirement incomes. Because of where we started from, right, you couldn't get to the ideal. It was just not realistic to advocate the ideal. But we advocated something which was second best and not far off. But I think the recommendations that we made need to be taken as a package in order for that to happen. I think it'd be very difficult to do those one by one, and it will probably be a few years before we see a set of circumstances where it is politically feasible to take that package and implement it.
And indeed, isn't this part of the main problem of this? After all, you did suggest just having 4 main central ways of raising tax revenue and keeping them fairly simple so people can understand them. But to suddenly change the whole tax system and to implement a new tax regime, that is going to take some time.
Oh, yeah. But it does happen. It took us a quarter of a century to implement a goods and services tax from its first recommendation, which was in the last major review of the Australian taxation system in the mid-70s, to when it actually occurred. Right? So you have to wait for these things to happen. If you take the corporate tax, we had what's known as a classical corporate tax system, which involves double taxation of dividends, a number of disadvantages. It was recommended that that be changed in the ASB review. That got changed in 1988. So you have to wait your opportunity. It's interesting that 2 years after the ASB report, the US government, the US Treasury, produced a document called Blueprints for Tax Reform, and many of the recommendations in ASB were echoed in Blueprints. Well, the US does not have a national consumption tax like a GST, even though it was said widely at the time that we were the only country without one. In fact, the US does not have one. It has a series of state taxes, all at different rates and with very different bases. Right? So it's a very different kind of system. And it advocated a breakdown of the US's classical corporate tax system, and that's never happened either. Right? So you look at what we've done over a quarter of a century, actually seems quite fast compared with what's happened in the US.
And of course, you mentioned GST there. The one thing the Henry Review, of course, couldn't look at was GST.
That's right.
Do you feel that was a
base?
Yeah. Right? Do you feel that was a mistake? That was a central tax.
Well, I can understand the reason why. I can understand it was such a sensitive thing to introduce. It took a quarter of a century for a reason.
Very controversial, of course.
Very controversial. And it has been elsewhere. Interestingly, in many countries, it barely raises a murmur. The UK can change the rate of its VAT all over the place, and no one seems to mind much, right? Not a big fuss. And when it was first introduced, it was not that big a deal either in the early 70s. But here, it's something which is very controversial. So I can see why the government said, look, this is going to be hard enough, right? We're just going to put that into the too hard basket. As well as that, I think it did generate a challenge for the panel, because a way of the GST, a properly designed GST, at the moment the GST covers about 2/3 of consumption. You want really for it to cover all of consumption. And of course, taxation of food. So there are things wrong with its design. It's pretty good, but you'd like it to be better. But there are many taxes which are worse. So if we had had available to us in the panel a consumption tax base of that kind, if we could do what we wanted with the GST, then what we would have probably said, I think, is, well, we'll increase the GST rate and we'll broaden the base and we'll take away all these less efficient and more complicated and more costly taxes and get rid of them. And that would have been an easy thing to write, an easy thing to recommend, and something which perhaps would never have been enacted. So by taking the GST out of the net, out of our realm of consideration, it provided us with an extra challenge, which was, supposing you can't do that, then how can you fix things? And I think that was, in some ways, a more interesting challenge to confront.
John Piggott, thank you very much.
Thank you very much.
For more business news and analysis from Knowledge at the Australian School of Business, please visit knowledge.asb.unsw.edu.au.